Hey guys, it's Crossroads here. Today we're going to talk about the broader market and if we are at a local top when the bull market is not over, but when there might be a pullback and that can last for a little while. What that looks like, some indicators that we would look for, some things that you may want to consider doing, and one thing that you really probably don't want to be doing at all. So let's take a look at this. So the S&P 500 is on quite a run. I know it doesn't feel like it. It's only on up like 7, almost 8% over the year. It's about flat today right now as we're heading into close for the week here in a few minutes. But you can see it's up tremendously from its April bottoms as well. And of course, it is at a all-time high. So what is a local top? Well, a local top, let's zoom out a little bit here. Let's do 5 years. A local top is when, yes, we're still in a bull market rally, but like here, we hit a top for a little while, and then there is a pullback. Sometimes that's 5%, sometimes it's a 10% correction. Rarely do we actually get something as big as this, which actually peak to trough was at 20%, technically a bear market. It didn't close that, so we didn't actually enter a bear market, though for some people they're regarding this as a new bull market. But you can see all the way through here, this is a 5-year time frame. There are many times as you're going up when there is a pullback, and those can last, for a couple of months, in some cases, a couple of weeks. It's not an uncommon thing. We shouldn't be too afraid of it, but we should be aware of it. And so what are some indicators of a local top, especially one that may take a little bit longer to come back from? Well, one of those that I look for is euphoria. When there's a lot of people, and I lump myself in this too, that are really eager to share all-time highs in their portfolio, that are showing off their massive gains, that are talking about and throwing out crazy price targets out there. Now, there are some, and if you're a SoFi investor, I'm not going to name names, but you know the guy I'm probably talking about, that throw pretty wild price targets out, no matter the time. So this has nothing to do with that, but those that perhaps are a little bit more level-headed, when they begin to throw out some wild, crazy, outlandish price targets, that may be a sign of a local top. Now, I've seen a little bit of this. I've not seen nearly as much as what signaled, at least to me, a local top previously and earlier in the year when we were actually over here, I think about here in early or middle February. I began to think, okay, perhaps there's a local top. A lot of people were throwing out just amazing, ridiculous gains for a little bit over a month into the year. And there was a crazy amount of euphoria, and people are already showing massive all-time highs and gains. Another thing that you oftentimes too see is people rotating out of safe names, which, that'll happen from time to time, especially when the market goes risk on. But they will also sell stocks out of boredom. Now, I did see this last week with PayPal. PayPal price action has been abysmal. It's been very painful. We won't talk about it too much here. That's not too unusual, but when you see it en masse, that a lot of people are just saying, hey, this stock's going nowhere. I'm going to chase something that's going a lot faster. And I'm not actually seeing a lot of that too. And it's not just me. Let me take a look at the Magnificent Seven and where it's at right here. As it loads, it goes a little bit slower because I've got an older computer. And when I'm running anything else, time to upgrade this probably next year. Anyway, you can see that across the Mag 7, and yes, I've got the index on there as well, that these names are actually up for the most part today. Some are down, like Apple is, seen as a flight to safety. It's doing okay. If you zoom out, well, you can see where the charts are. I'm not really seeing an indication of selling off what's safe and going and rotating to other things as well. I'm seeing a little bit of that for retail, but not as much broadly. And so this is an indicator also that I think is kind of missing, which would typically indicate if you're seeing the opposite, where people are selling these off, they're bored, they're dissatisfied, they're moving on to more exciting and tempting targets. That's a sign of a local top. So I don't know that we're seeing a local top here. Now, another quantifiable indicator that I look at, looking for local tops and also looking for oversold conditions in the opposite way, is the fear and greed indicator. You'll hear this mentioned quite a bit. I want us to talk about it a little bit, how this is actually informed, what this means. I think some of these actually have higher weight than others, but we'll take a look. So in essence, this is a fear and greed indicator. If it's 75 and above, which is where we're in right now, we're in extreme greed territory. Typically, a lot of the more professional seasoned investors talk about selling greed, and so they'll sell into strength like this and euphoria. and they will buy fear. And so it wasn't actually that long ago. You can look here. A month ago, we were neutral, but back in April, we were in and tapping extreme fear. It was a good time to buy. So how is this informed? Well, there's a couple of things to look at. So one is market momentum. So they look at the S&P 500, and it's a 125-day moving average, whether it's over extended and over the top. It is in greed, but not extreme greed based on that extension. Now, if it continues moving up rapidly, it will be an extreme territory. This is one I don't look at too much, but it can be pretty useful. Just looking at that broad index. RSI, I think, is a little bit more useful there. Stock price strength, net new 52-week highs and lows on the New York Stock Exchange. So if there are a ton of tickers, not just a few, that are hitting all-time high after all-time high, week after week after week, yeah, that's in extreme greed territory. And here we do see that there are, it's not a crazy amount, but it's 2.66% of the New York Stock Exchange stocks, really indicating like, yes, they're hitting all-time highs. Hopefully you're in some of those as well. Of course, back in April, it was the opposite, and it was very bearish as well. Stock price breadth. This is basically an indicator that helps you know whether or not it's just a few stocks type of thing, and it's a stock pickers market, and those are doing really well. So what we saw back in 2023 and 2024 as well, maybe not as much this year. There's a lot more breadth to this rally. You can see 2024 did have some seasons of that too. This is an indicator of extreme greed. Put and call options. This is actually, I think, maybe the best indicator and part of this. And it's something that you can look at yourself. Basically, if you're not in the options, call options are typically written or bought rather by retail. And you say, okay, I'm going to buy options, usually out of the money. And there's more and more on 0 days to expiry type of options. I wouldn't put too much as far as 0DT being at an all-time high. It will continue to be as there's more and more retail participation the longer the bull market goes. Doesn't mean that there's going to be a local pullback. But if there's a whole lot of people that are just buying options, naked calls, and saying these stocks are just going to keep moving up forever, and there's more and more of that, that's something to look at. That's a sign of euphoria, and you can see where we're at. Puts, of course, is what typically there's different things you can do with puts, but oftentimes it's just written. It's a naked put. You're predicting a stock to move down. If it does, you make a lot of money. A lot of people will do that actually as a form of hedging or insurance. I've done that before on some of my tickers that have flown very high. And so when you don't see a lot of people buying insurance basically on their portfolio, it's a sign of euphoria. And right now you can see the ratio. This is an extreme greed territory. It's not the most extreme that it's ever been. In fact, here recently in early July, it was even worse. But it is a very good indicator, I think, to look at. Also the opposite way. When you see, usually you'll see a lot more calls than puts. But when you see them on par, like it was on April 9th, which was the signal of the bottom, that's extreme fear, and that's usually worth buying. Market volatility is another one. This is a volatility, the VIX, the volatility index. It's one that I actually don't think is quite as useful here. I think VIX is great on individual tickers and sometimes the broader market as well. When VIX spikes, when there's a big drawdown, or really, it doesn't have to be a drawdown, but a big move in stocks, and usually that is to the downside, the VIX will spike temporarily. And that's a great time usually to buy, especially when you look at previous peaks of the VIX and you're like, okay, is what is happening in the news as scary as that moment there? And so COVID is a classic example. If not, you could be like, okay, this is too much of a reaction. Let me buy that. Now, the opposite is true. When the market tends to move up in a systematic way, like it has been recently, the VIX will go down and will actually go far below what is the norm. You can see the 50-day moving average as well. It's technically neutral, but as time goes on, the VIX will continue to go down if the stock market keeps going up in a systematic way. So I think it's helpful actually to look at VIX in isolation here as well. Don't worry about RSI. That doesn't matter for VIX. But this is showing these massive spikes. Again, it does that right around fear. And there were some fearful events. This, of course, with the yen carry trade day, spiked like resembling what COVID did. And I'm like, okay, this is ridiculous. I bought a lot of stocks then, made a lot of money. This was, of course, due to tariff fears. But it does the opposite. You can remember, maybe you don't, but late last or 2023, the markets were roaring. They were doing really good. And usually the VIX settles down. And that when it's trading significantly lower than historic norms, You can see if we zoom all the way out where it's at. Some of this is actually before the VIX was a thing, so it's back testing. But you can see we're not really crazily low. We're not like it was back here in the 2014 to 2018 timeframe. Of course, there were times of spikes. So it can go lower. It's more neutral right there. Now, there's two more aspects in the fear and greed index. We'll look at those real quick. This right here, safe haven demand, is looking at bonds demand versus stocks demand. Stocks are riskier than bonds. Bonds are free money, guaranteed money. And so we're in extreme greed territory there, and also junk bond demand. When you're not only looking at bonds, but junk bonds that are worth a lot less, that carry a lot more risk. When there's a lot of appetite for those, it's risk on environment. So yeah, overall, we are in extreme greed, but just barely. And it doesn't feel to me, this is not quantitative, but it's qualitative. And looking at the VIX, for instance, like it's anything crazy yet. So I think we might actually be a little bit further away from the market top than I thought before I began to research for this video. Now, the last thing that you'll see as an indicator, or one of those other things that I look for, is looking for the next big thing, a dissatisfaction with your current position, your current portfolio, thinking that, a stock going up 10% in a month is boring, lame, not worth your time, a waste of time. If you could get 10% out of a stock consistently on a consistent basis for years and years and years, you will become one of the wealthiest people out there. It's just so 10% is amazing. Even going up 20, 25% in a year is a great thing overall for your entire portfolio. It's much less half of the year, but you'll see a lot of tickers of lower quality companies. Sometimes they are diamonds in the rough. They're actually good companies that have done a turnaround story. So just be aware, just because something was written off for dead and then it starts moving, like hopefully PayPal one day, it doesn't mean like, hey, this is Euphoria, local top, time to sell. But one of those that I've been seeing a lot recently is ticker symbol OPEN, OPEN. If you're familiar with it, not familiar with it, it's Open Door Technologies. What they do is real estate. And so they had a real estate model that was a little bit differentiated, kind of like the CarMax model. Specifically, they had a whole team of people. They were buying and selling homes. They had agents that you would talk to on the phone. You would just be able to go and schedule at any time. My wife and I actually checked out Open Door back in the day in 2023, and we're not impressed. We found the quality of houses, the repairs and everything were very shoddy, that it was done very poorly, that the pricing wasn't very good, and the overall experience, there were some things we liked about it. It was easier to get an appointment, and we could just go on our own without a real estate agent, but it was not fun. And there's a lot of concerns with that company as far as the quality of company. I'm not going to go too much into those, but it's up a lot. I mean, you look at Open Door, and my goodness, if you've been trading this from 53 cents to 225, you're up almost a 5x. That's incredible. Congratulations. But can it go forever? Well, I mean, look at where it's been before. Let's look at those COVID highs. It is down immensely. I mean, for a while here, it was over $100 a share. I don't think it's going back. And yet some people do. This is Eric Jackson. I don't know him personally. He was somebody that actually called out Carvana, which I think is actually it's an okay quality of company. It was written off for the dead. He had massive, massive gains on Carvana. Look at his due diligence, see if it's compelling. But there's a couple of issues with it. One of them is stock price of $82, 100x from here. When there's people calling for 100x's, like they do happen, and he got one with Carvana, and that's amazing for him. He's made some other good calls too, and not all of his DD there is trash, but he seems to think that there's a correlation between the Federal Reserve cutting rates and the housing market. And there's really not much of one. I've made posts separately. I've talked about this before as well, that really what infers mortgage rates, the 30-year mortgage specifically, is the 10-year treasury yield, which again is largely a supply and demand thing. Now, there's a little bit more to it than that. There is a slight impact if the Federal Reserve does cut rates, but it's not going to suddenly unlock the housing market. Eric is completely wrong there. But there are some other things he pointed out which are, possibly right or could be right. The risky thing is, and you'll see a lot of people pile money into this and buy options. And let's take a look at a couple of those. This is not a high quality name. And so this is an article in Sherwood Media. They had an interview also, I believe, with him. But this is a daily calls volume in Open Door. And yeah, it's a little bit high. Most of these, I'm guessing, are naked calls, far out the money, and the premiums are not low right now just because of the implied volatility there, the IV. Here is weekly interest on social media, basically appearing in Google Trends. Yeah, it's really high. It's at an all-time high. That's a dangerous thing. There's some other indicators there on open too, where it's not high quality. It doesn't mean you can't trade it. It doesn't mean you can't make money off of it. But if you're looking at this as a long-term investment and you're thinking it's going to 100x, you're probably wrong. Now, if it works out for you, congratulations. Just know when you see a lot of things like open, looking for the next big thing, dissatisfaction with boring stocks, that's a sign of euphoria. So overall, am I saying that we are at a local top? I actually think that we have a little bit more to run. I could be wrong, but it's more of a mixed signal at this point, not a strong signal. Now, if we do have a local top, again, I don't think that we're going to see something like we saw back in April when the stock market dumped nearly 20%. And I'm sure your portfolio, if you weren't hedged especially, was down 30, 40, maybe even 50%. So one of the big mistakes that I see people do when they think that there's going to be a local top is get out of the market entirely. They just sit cash. I've known people personally in real life that have done this, and almost always have regretted this. Now, sometimes it does work out, and it works out fabulously. But Warren Buffett has a saying that time in the market beats timing the market. Well, let's look at why. Now, even here, if you got out of the market entirely, let's say you sold at the peak, that's amazing. You did great. You saw what nobody else saw. But the hard thing is you don't have to just be right once. You have to be right twice, selling and then rebuying as well. And maybe you weren't trading and you weren't in the market there, but not many people were expecting a bottom at that point. It felt like it could go a lot further. And so maybe you bought and you made a little bit of money because you sold and then you bought back. But instead, what tends to happen is the stock market goes up and people are like, this is stupid. It's based on quantitative easing. COVID's still out there. It's going to be a disaster. And the market keeps going higher and higher. And so instead, you buy back right here. So yes, maybe you got one of these right, the selling, but you missed the buying. And so you bought in at a lot higher level and you missed out on a lot of gains. Now, another classic example here is, of course, at the end of 2021, the end of the bull market. If you timed it, and some people did see this and some people took some gains off the table, but I expect that there was more than a few that got out entirely. Well, guess where we are right now in the market? We are significantly higher from even that point, which was a local top and was the beginning of a bear market. Now I'm not talking about even a bear market, but let's look over in the 1 year time frame. If you, let's say, when President Trump was elected, let's say, hey, I think that this is going to be bad for the market. Tariff policies are uncertain. And I was kind of thinking that, although I didn't do anything about it at the time. I did hedge actually close to that drawdown, although I wasn't fully hedged, but it did alleviate some pain. But let's say you sold right around Inauguration Day. Great. You actually almost timed the local top perfectly. It did actually happen nearly a month later, yet nevertheless, you would again have to get it right twice. And the problem is here, this didn't feel, I know things were oversold and it looked like it was a good time to buy, but it felt like it could get a whole lot worse. And so you would have had to not only time the sell, but also time the buy. And guess where we're at? Not just a few months later, new all-time highs. So it's you do you. If you want to sell out completely, sit on the sidelines, you can do that. But usually it's a colossal mistake. Now, instead, what you might want to do when and if we get near a local top and you're kind of feeling that and you're seeing a lot of these signs of the euphoria, the extreme greed, looking and chasing for the next big thing that we talked about, you might want to take some risk off the table. I talked about this in other videos as well, but if you made massive life-changing gains, it's okay to sell and take some of that. Just know what you're doing as far as why you're doing it, what you're using that money for, what the goals are and everything as well. But you can take some off the table. You can lock in some gains. There's nothing wrong to do that. Myself, I've taken a little bit off the table from shorter swing trades that I have. I have some long-term positions too that I've not really trimmed at all in this run. I do have some options that expire in a year and a half, but I'm okay with those. But in the previous local top, I had some that expired in like 8 or 9 months. And I said, you know what? Now is the time to probably go ahead and sell some of these just because they're a little bit riskier. Now, if you're in leveraged ETFs, if you have some riskier positions or stocks that you're not that confident in, that you made a lot of money on, uh, you might want to take some risk off the table. Just kind of think about what it might be if we have a 5 or 10% pullback or correction in the market, where your portfolio might be at. If you're like, hey, I'm fine, I'm great, I can sleep at night with what I have, then great, no need to make a change. If instead you're like, oh man, I remember the pain of the tariff woes, I don't want to go through that again, figure out what's the right amount of risk for you right now and make those moves accordingly. And the other thing that I really do, and I'm doing right now, is I'm raising cash. So I have some money that comes into the market, usually around payday, so twice a month. And I'll right now, instead of DCAing, I still am doing that for Bitcoin. But for everything else, I'm just letting that cash pile up. I'm selling options. I'm letting that cash pile up. There's a few little trades that I've made, but I'm letting that cash pile up. Still, I have less than 10% cash. I'm raising cash, and I will continue to do that over the next few weeks. I don't know that we're at a local top. I don't know that it's happening anytime soon, but I'm pretty comfortable with where my stocks are right now, my level of risk, even if we get a pullback. And I want to have a little bit of money there to be able to buy the dip in high quality names and stocks that I'd like to add more in, just not at these levels. So that's what I'm doing. That's what I'm seeing. And let me know what you guys think in the comments. Are we right there at the local top? Are you doing a different type of strategy as we go into a local top? Are you thinking, hey, no local top anytime soon? It's full risk on. I would love to hear in the comments, because I don't always get these things right. I'm especially not great at trying to time things, but those indicators do help me. Anyway, thank you guys for watching, commenting, and subscribing. And until next time, happy investing.